What's going on, everybody? So by the end of today's video, you guys are going to be able to spot supply and demand zones slash order blocks, very precise zones with nothing other than your bare eyes. You guys are going to need no indicators, no RSI, no Fibonacci, none of that stuff, just nothing other than your eyes and the graph. I'm gonna make today's video I'm gonna try to keep it very short for you guys, very simple and easy to understand. If you guys have any questions, I'm gonna plug in my Instagram so you guys can send me a DM, or if you guys aren't understanding how to like draw the zones, or you guys have questions, you guys want me to check your zones and stuff, you're more than welcome to send me a DM, and I will be more than glad to guide you and like give you my knowledge and experience. So these are the 3 key rules that I have for you guys when drawing a supply, demand zone slash order blocks. So real quick, what does this mean? I know you guys are probably like, well, is it a supply or is it an order block? So traders, a lot of traders call zones either supply and demand, or some traders call them order blocks. But if we get down to it and we're very precise, an order block, if it's an order block where sells come in, it's obviously an area of supply. If it's an order block where a lot of volume comes in for bullish movement of buys, obviously it's an area of demand. So I just have this here so you guys can call it whatever you prefer, but in reality it's supply and demand zones, just people call them order blocks. But I'm going to show you guys how to draw them very precisely and how to find them in the market. So first things first, these are the 3 rules that I want you guys to write down, screenshot and write down, or if you guys want, pause the video and write them down. But let me break them down for you. The first one is has to be the previous candle before a strong move. The second is has to be untouched by any candles. And the third is has to break some type of microstructure or major structure depending the time frame of the time frame zone. So I'm gonna break down each and every one of these for you guys, and that way you guys can understand what I'm saying. So first things first, I just pulled up, like, I don't trade this pair, the GBP USD. I personally trade GBP JPY, but I know this is one of the most traded pairs. So let's go and break this down. Let me put this a little bit smaller, but we're still gonna have it here so you guys can see exactly what I'm talking about. So let me break this down for you real quick. Right here, the main zones that I'm seeing is this right here. This is a demand slash order block right here, and if you guys can see, literally you see how the movement came out of here and how precisely price wicked it, and you could have got a nice buy right here. Literally you could have got well, this is a crazy ratio, a 1 to 18, but realistically I would have been happy with a 1 to 4. Let me break this down for you guys and show you how you guys could actually spot these zones and benefit from these zones. So let's break this down. So the main rule, the first rule, that's not the main rule, but the first rule says has to be the previous candle before a strong move. So meaning if we have a strong bullish movement, it's going to be the previous candle, meaning a bearish movement. So if we're drawing a demand zone, we're going to draw it from a bearish candle. And if we're drawing a supply zone, it's going to be a bullish candle, if you guys want to write that down. Let me say it again. So for a demand zone, it's going to be a bearish candle. And for a supply zone, it's going to be a bullish candle. So check this out. Has to be the previous candle before a strong move. This is the previous candle before this strong move that took out these highs coming out from the left over here. So that's the first rule, so it checks off. The second, has to be untouched by any candles. So let's draw like this so you guys can see it. Right here, I'm obviously drawing it, anticipating it to catch these buys here. So obviously when we draw it here, it's going to be untouched. You see how when we use it is the only time that it's going to be touched. So we draw like this and it's not touched here. So that's the second rule. And then the third rule has to break some type of microstructure or major structure depending of the time frame zone. So what that means is if we're here on the 15-minute and we're drawing a 15-minute zone, we have to break some type of structure on that time frame. And here we do, we break up the structure coming from the left. So this checks off all three categories, and this is a valid zone right here, this zone right here. And you can see that there was definitely some volume here. Price literally tapped it to the pip, and that's like where price is currently at right now. You can see that a strong movement of literally 137 pips has come out from this zone, like to the exact pip. So let me give you guys another example. Also right here, the next thing that catches my eye, first thing that I see right here is this previous candle before this strong movement right here. So here we go. We break this low right here, so that's the second rule. I'm sorry, the third rule. We have to break some type of structure. Second rule is untouched. You can see right here the candle, the zone is untouched. Let's put it a different color, like this. Has to be, yeah, the previous candle before the strong move. So here we go. It checks off all three rules, and you can see literally when price touches it right here, the same thing as this zone over here to the pip, a strong move comes out. Literally, a move, we could say, let's be precise over here. A move about 120 pips came out of the zone. So you easily could have caught another like 1 to 4, 1 to 8, like a crazy risk to reward trade coming out of these zones. But you guys see how precise and how like accurate they are. So let me give you guys another example. So here, I'm gonna put this here one more time so you guys can take a screenshot of this. I'm actually gonna copy and paste this. So give me 1 second. Okay, so I can delete it here, and then I'll just pull it up in the different graph. So let me pull up the pair that I actually trade. So I trade this pair right here, GBP JPY. Let me put the rules here for you guys. Okay, I sent this to myself. That's what you saw in the text message. I was literally copying and pasting what I sent to myself. Okay, so this is GBP JPY. Let's break down. Okay, so I actually have a signal group and where I send trades, the same trades that I take, if you guys are interested in that. But I'm gonna actually give you guys an example of a trade that I called myself. So let's just go here. Okay, I'll explain what that is after, but I don't want to confuse you guys. So let's go to a trade that I called back here on the 21st. Give me 1 second. Okay, there we go. Okay, so let's break down a trade called on the 21st. So I'm gonna just turn this on real quick so to guide me to see exactly the session. So these right here, this is nothing more than letting me know that what the price did in a session. So for example, each color represents a session of the market. The yellow is Frankfurt, the orange is London, the baby blue is pre-New York, and this is New York, and this is Asia. So just so you guys know and aren't confused wondering what it is. So let me go back to the 21st, this trade right here. Okay, and this is going to be on a lower time frame, so you guys can see exactly what I'm talking about. So for example, here we go. This is on the M1. This is the time frame that I usually trade on. Obviously use higher time frames to look at the overall market direction and know where we're going, but I definitely take my entries off of the M1. So I want you guys to notice this. Notice this previous candle before this strong move that comes in right here. This order block right here. Let's see our rules real quick so you guys can see our rules. Or let's put the rules right here. Okay, so check this out. So our first rule has to be the previous candle before a strong move, has to be untouched by any candles. This zone is not touched by any candles. Has to break some type of microstructure or major structure. So here we're talking about microstructure because it's a M1 time frame zone. So when price breaks these lows right here, it's a valid order block. So I called a sell limit literally right here at 163.487 right here. This is a valid entry right here. And you guys can see that these entries are like super precise. If once you get the hang of it and you can spot these zones, you're gonna see that this is the most precise way to draw your supply and demand zones slash order blocks. So let me give you guys another example, so you guys can see how precise this is on M1 and the higher time frames as well. So let's go to like the M15 for example. Let's get out of replay. Okay, let's go somewhere random. I wanted to give you guys a valid example of like a trade that I called. That way you guys can't like, it's not that I'm just out here picking like perfect scenarios to say that way you guys can see like actual like live markets. So I don't know, let's just go right here. Let's go right here. Okay, let's go on the lower time frame like M5, see if we see anything, any order. Okay, perfect, right here. So check this out, guys. Let's put our rules right here again. Okay, obviously I'm picking random examples, and obviously if we were trading in the current market session, we would be doing a deeper analysis, and we wouldn't just be taking trades off of like a lower time frame. But I'm showing you guys how to spot these zones. So check this out. This is on the M5 time frame. Let me put this here, move this right here. So check this out. We have this previous candle before this strong move that took out this high right here. So let's draw like this so you guys can see it. Like that. Previous candle before the strong move took out these highs. The area is untouched. It's not touched by any candles here. You can see it when it's touched, is that we're using the zone. Like no candles touched it leaving the zone, and has to break some type of microstructure or major structure. Oh, we broke this high right here. So you can see that a clean buy could have been taken right here. Could have got a nice 1 to 4 risk to reward. Like that. Let me delete this. Yeah, this is obviously like I'm showing you guys a rough example, but these are key things right here to spot the supply and demand zones. Let me give you guys one more example before we wrap this video up. So let's go. There's definitely some type of area here. Let me delete this. Let me give you guys like a heavier, a stronger example on a higher time frame. So let's go to like the daily, for example, or better yet, let's go to the weekly. So check this out, guys. Nothing in the market is a coincidence. So check this out. You can see right now that we have a strong, we're having this on the weekly time frame. We're having a strong movement on GBP JPY. Check this out. Almost 2,000 pips in these 3 weeks. More pips than literally, I would say, the whole last year combined. We got more movement this last week than the whole last year combined. Like, I mean, not the whole year combined, but in the meaning in the last year. So check this out. And where did the movement come from, guys? So check this out. If we look right here, we have, let's write down on our rules right here so we could, so it's better for you guys. Okay, here we have a previous candle before this strong movement. Literally this strong movement, breaking lows coming from this left over here, and right here breaking these lows. So we draw like this. The area is untouched. It's not touched by any candles leaving the zone right here. And we broke the major structure here. We broke structure here, so it's valid. And check this out. Literally this sell volume that we're getting is coming from this area over here. So I'm just showing you guys that this works on every time frame. So meaning that there's a saying that I heard someone that I considered a mentor a long time ago, that he said price knows no time. And what that means is what you're looking for on a higher time frame is the same thing that you're looking for on a lower time frame. It just obviously, like, a higher time frame is a bigger move. It's a more confirmations. Like if you're a swing trader, like, you get what I'm saying. It all depends if you're a swing trader, a scalper, all that good stuff. But yeah, that's pretty much this video today. I'm trying to keep it very simple and short for you guys. I hope you guys find some value in this, and if you guys need any help or anything, feel free to DM me.